18 of 19 series are aligned with stagflation strong this morning. That represents the highest confirmation level in 6 weeks. The current macro regime is stagflation strong, with a confirmation score of 18 out of 19. The engine is observing stagflation strong, an environment where growth momentum decelerates at -0.0296, while inflation momentum accelerates at +0.0081 simultaneously. This macro regime captures the mathematical signature of economic activity softening as price pressures build across multiple sectors. The coherence score reflects systematic agreement, and the confirmation score of 18 out of 19 series represents substantial alignment across asset classes. Historically, this level of confirmation has persisted in 52% of comparable instances over 3-month periods when reached from similar conditions. Compared to recent weeks, confirmation has strengthened meaningfully, suggesting the stagflationary configuration is solidifying rather than dissipating. Historically, periods of sustained stagflation confirmation have coincided with compressed equity multiples and elevated commodity volatility. High-yield credit spreads show red momentum, defined as the 30-day rate of change falling below the 20th percentile of its 2-year distribution. In 8 of 12 historical instances, when credit spreads exhibited this deterioration during growth deceleration, equity volatility increased within 1 month. Employment data registers red momentum, with payroll growth below the 30th percentile of its historical range. In 7 of 9 comparable periods, this labor market softening coincided with broader economic deceleration within 6 weeks. Treasury yields display yellow momentum, with the 10-year rate of change within 1 standard deviation of its mean. In 15 of 23 historical instances when yields held neutral momentum during stagflationary environments, the regime persisted for at least 2 months. Energy sector rotation shows green momentum, above the 70th percentile of its distribution. In 11 of 14 historical instances, energy strength during stagflation preceded broader commodity acceleration within 8 weeks. If the 10-year yield crosses 4.45% and holds for 5 consecutive sessions, inflation composite historically showed acceleration in 9 of 11 similar instances. This trigger would increase the mathematical case for an expansion to acceleration transition under the regime framework. If fear and greed drops below 15 and holds for 5 consecutive sessions, confirmation score deteriorated in 7 of 9 instances. This condition would formally lower the confidence level and raise regime watch flags across the system. The map is live. These conditions are being monitored daily across all 19 series. Atlas is the automated, rules-based engine inside Given Analytics. It does 2 things in parallel. First, it publishes a view of the macro environment, the regime, the confirmation score, and the historical base rates we just covered. Second, it runs a fixed 4-layer mathematical framework: price structure, rate of change, risk regime, and market participation, across 407 symbols every trading day. When all 4 layers agree on a symbol, Atlas records it as a potential long or potential short condition under the framework. These are time-stamped model readings, logged for members to study. The environment view and the condition log sit side by side inside Atlas. They are separate outputs. The regime does not pick the symbols. The 4 layers do. Members use Atlas to study how the framework has recorded conditions across prior environments, as historical behavior, not as trade selection. Atlas runs the framework. You study the outputs and environment. You decide what to do next. May be useful. Potential patterns. Educational context only. The morning brief is the public surface. The live Atlas dashboard shows the full 19 series regime map, today's mathematical conditions across 407 symbols, and the historical archive side by side. Members study the environment and the Atlas outputs each morning. If you want to track this alongside us, the live view is at givenanalytics.com. These are historical mathematical observations, not predictions and not advice. Given Analytics is not a registered investment advisor. Hypothetical results may vary from actual results. Market conditions can change at any time, not investment advice. Givenanalytics.com/disclaimer.